Do you want to know what the ultimate strategy is in making money on real estate and not paying taxes for it? Check out this video, all right? Hey everybody, my name is Jim Fong with the Jim Fong Group at Urban Nest Realty, and today we're going to be talking about the primary home capital gains tax exemption today, all right? What does that mean, all right? Well, we'll get into that later in the video, but if you like tips on real estate, investing, and things like that, please check out my channel and subscribe. So we're talking about capital gains exemptions with your primary home in real estate. Put that in more general terms is your primary home is the house that you live in. So let's say you bought a house and you lived in it, and the value of your house goes up over the years, right? Goes up in value. And then you decide to sell that house. Well, normally when you have some type of gains like that, or if you make money in some way, the IRS is going to want to tax you on the money that you've made. However, there is this one special tax exemption, and it applies to your primary home only. So what does that mean? Well, let's just say that you bought a house, you've lived in it 2 out of the last 5 years, you sell it for a profit, you don't have to pay taxes on it. The limits on this are, if you're a single person, it's $250,000, and if you are married, it's $500,000. Here, I'll give you a little example here, all right? If you are a single person and you bought a house for $300,000, and let's just say the value of the house goes up, it's now worth $500,000, all right? You've made $200,000 with this real estate transaction. You would have to pay taxes on this normally as a capital gain. However, if it was your primary home, meaning you lived in this for 2 years at least in the last 5, you don't have to pay taxes on any of that money. I'll give you the married couple example now. If you were married and say you bought a house for $500,000, market's gone up, now it's worth $1 million, you sell it, well, that $500,000 that you just made is tax-free also if it was your primary home for at least 2 out of the last 5 years. All right, this is such an advantage for a person to build capital assets and things like that and not pay taxes on it. It's something that everyone really should take advantage of, and probably should think about taking advantage of it sooner, because there's always talks about reducing this or eliminating this thing. So it's something that you really want to consider if you're serious about real estate investments. Why is this the ultimate tax strategy? Because when you buy a primary home, you get qualified for the best mortgages, meaning the lowest amount down. You live in the house anyways because you got to pay to live somewhere, whether it's a mortgage or rent. Prices go up, you sell it, you make a profit, you get to keep all the money in your pocket without paying any taxes on it. And what you probably should do at that point is buy another primary home with a low down payment, and with the money that you made, maybe do some other investments or something like that too. If you have other scenarios that you want to present to me, drop it in the comment below. But if you like videos like this about investing in real estate, please check out my other videos.